Hey, welcome to another episode of the Innovation Mindset podcast powered by the Jim Moran College of Entrepreneurship. I am Mark McNees, your host, and in studio today we have a very special guest who yesterday spoke at 5 Under 30, an event we have here at FSU where we invite 5 entrepreneurs who started companies before they were 30 years old. And today, that is Josh Orlinsky from Equiturn Holdings. Hey, how you doing, Josh? Thanks for coming in. Tell us a little bit about your company.
Yeah, first and foremost, thank you for having me on the podcast here today. I'm excited. My company, Equiturn Holdings, is a multifaceted global investment bank, many entities within, but essentially what we do is regulated and unregulated financial services, so securities trading, debt, equity, investment advisory, wealth management, asset management. We have 3 funds in there. So a lot of buzzwords in between that I'm sure we'll go through, but yeah, financial services organization.
All right, great. And I'm sorry, you're in Fort Lauderdale. I knew it was some fort. I was like, Fort Walton? No, that wasn't. I was like going through all the Florida forts. Okay, Fort Lauderdale. Okay. Are you from that area?
Yeah.
Okay.
Pretty much not born, but born and raised. I moved over there when I was like 6 months old. And I was there all the way till I went to FSU.
All right.
And then the rest I'm sure we'll talk about throughout this podcast.
Yeah, we'll get there. So first I'd love to just hear a little bit about your origin story, just how you were raised. Were you raised by entrepreneurs? Were you raised by wolves? Whatever. Just tell me a little bit about just you as a person growing up and the influences in your life that you kind of credit as making you the person who's sitting here today.
Sure. Yeah, that's a tough one. But even so, is that born and raised South Florida. Parents were not entrepreneurs. My father kind of bounced to jobs here and there. He mostly focused within automotive, wheels and tires. I think if there was a concentration towards it, but he had bounced in here and there. I would say in career, he was a salesman. Okay. And then with my mom, she was a substitute teacher. She then moved on to being a teacher in elementary school, middle school, then high school, got her master's degree, and then she became a principal.
Oh, wow.
So I think as we go down the road, the two kind of embody myself.
Really? Right? How so?
Because my upwards movement through the trajectory of my entrepreneurial career, I guess you can relate to my mother starting at one position, moving all the way to the top of her field in South Florida. My father being a salesperson, I like to always say that I think I'm the best salesperson in my business out there in the entire world.
All right.
And I actually believe that. And so I think I come from a lineage of salespeople, from my father to his mother to his, so on and so forth. Yeah. So I think that as I introspectively looked to see how I became this way, I guess, is, go through the DNA, push on one side as hard as you can through the system, and then sell like hell on one side, on the other side of it. Yeah.
Gotcha. What did you study at Florida State?
I studied finance.
Finance. Okay. So you were in the College of Business?
I was in the College of Business. I did a double major at the beginning in a finance and accounting double major, 5-year program, but I had two internships prior to graduating. And then they explained to me that I needed to only graduate in 4 years or else they would give my job away at the end of the time. So I had to drop the accounting major and I just kept finance because I liked it a lot more.
All right. Right on. So what was the years that you were at FSU?
2009 to 2013. I graduated spring 2013.
Okay. Right on. And then after you graduated, so did you go to work for the company that you had an internship with? What company was that, if you can say?
It's a company that I don't know if it's around anymore. It was called Analytic Financial Group, but it was a subset of another organization called R.A. Yancey and Associates, which was a distressed asset financial firm up in Washington, D.C. So I did 2 internships with them in my sophomore and junior year. And then I worked all throughout my senior year remotely, and then took the job with them 2 days after graduating from FSU. I did my graduation on a Saturday, took a flight at 6 a.m. on Monday, and haven't stopped working since then.
Wow. So when did you start Equiturn?
About 8 years ago.
Okay.
2017 or so.
So what was the catalyst for that? I mean, it sounds like you had a pretty good job. You were probably making pretty good money. So why risk all that and go off on your own?
Yeah, both are right. But I always wanted to be an entrepreneur since I was young. Since I was a kid, I started businesses. At 11 years old, I guess it was my first go at it. I started going door to door, knocking on doors for car washes and providing car wash. I did that for 2 years.
Okay.
Had way more money than a 13, 12-year-old ever should have, because who can say no to a kid asking for $20 to wash your car, knocking on your door at that time, especially. But, I did that. I did a music production company when I was young. I did a skateboarding company. I did an alcohol delivery service here at FSU before Uber Eats and before all of that was around. So always had been an entrepreneur. It just so happened that I fell in love with an industry that was absolutely massive, dominated by legacy institutions. So I chose a really, really hard one. But at the tail end of my Washington, D.C. stint, I wanted to go home. I was up in D.C. It was too cold. The first winter was cool. It was awesome, snow and everything. Second winter, less cool. Seventh winter, I'm freezing. And so I was ready to go home, and I also wanted to do a little bit of a different thing. Distressed assets it can be a great business. It's just really, it can be sad sometimes.
Yeah.
Watching people go through the worst times of their lives and then profiting from it. And I didn't resonate with that. I don't like the idea of it. But towards the tail end, at the beginning, this is real business. I'm really doing some cool stuff. And at the tail end, it was, I don't want to do this and watch people go through this process anymore.
Yeah. Unpack a little bit for us, like distressed assets and like what the company you're working for, like, how did that work? Did they contact you? Did you contact them? And what were the services that you provided?
So I got that internship through my uncle. He had worked in that realm and that space up in DC, and so he got me that internship. And then the services that they offered, basically what they did is they bought or managed companies that weren't doing so well, and then whether they got it out of a bankruptcy or this, that, or the other. But really what the idea is break it down for parts or whatever it might be to profit as much as you possibly can.
Yeah.
And so it wasn't my favorite thing towards the very end of that, because you just, like I said, you watch some really great business going on, huge profit and everything you can imagine, because it's distressed. And if you provide any money to that, they're kind of willing to take it.
Yeah.
And then we just profited on that. So it didn't feel as comfortable towards the end into what I wanted to be doing, which is really helping people. Is true. Is that if I look at the why of what I do, right? As you watch all these videos, it's the why is the most important thing. And the why of what I do is because I don't know necessarily why we are all here on this planet per se, but the way I can foresee what it could be is to help people, help each other, right? To be there for one another. And I don't have very many skills. I'm great at one thing and I'm horrendous at everything else. You ask me to cook some eggs, it's not going to come out so great. Ask me to, run a multi-billion-dollar financial transaction, I can do.
Yeah, okay.
But so this is the way I know how to help people, because at the end of a deal, there are 500 families or 1,000 families or whatever that are being affected by it, as the employee sets and everything like that. So this is the way that at least I justify in my mind that when we are able to take a company that might need to be restructured or this or that, or they're going through some tough times. If we infuse cash in some way or another, we give them a new chance to send their kids to school or put food on the table, and that keeps me going in some way or another. And whether that's justification or not, I don't know. But one thing is for sure, that's why I do it. So
yeah. So the name Equiturn is equity, turnaround business kind of idea. Or did I get that wrong?
No, you believe it or not. When I took a year planning the company out up in DC, and at first I was like, I'll just do turnaround, like distressed assets all over again. And then now I have to justify it that it's something like turn your equity into whatever that means. Yes, it was equity and then turning things around at that time. Yeah.
All right.
Yeah.
So cool. So if you could give, and it can be a real case study or just kind of an example of like what your company does and what do you do well?
That's a loaded question, but I'll try to keep our time right.
All right.
We do two different, very distinct components of finance. So the easy way to think about it is there are buyers and sellers, and we bridge a gap between that. So basically, there's more capital, there's more money out there for investment than even I can fathom. And I've been doing this 16 years. You talk about the word $10 trillion. BlackRock runs $13 trillion. That's an unfathomable amount of money. But there is that money for good deals. Good deals are much harder to come by. We provide a bridge between the money and the deals. Okay. That's an easy way to think about the investment banking side. And then asset management is the other distinct vertical, I guess. And we have 3 funds. So we aggregate pools of money from investors, and then we invest it ourselves on their behalf. And so we do it in 2 hedge funds, so public markets, if you will, and then 1 private equity fund, mostly noted for sports and entertainment equities. We're very heavy in the world of professional sports trading. And so that's a little bit about what we do: investment direct and bridging money with deals.
Okay. And this may be a dumb question, so you can just say, Mark, that's a dumb question and everything. But do you view yourself as representing the seller or the buyer, or are you a neutral party? Who are you? Like, you're putting them together, but who are you in that dance?
Sure. It's not a dumb question at all.
Okay.
Because you are always on the buy side or the sell side, right?
Okay.
So when we're internally talking about the deal, which if we want to onboard it or not, we'd reject about 95 to 97% of the deals that come in. But we always ask, is this buy side or sell side? Meaning, are we working on behalf of the buyer, or are we working on behalf of the seller, the money, or the deal? Okay.
Interesting. Gotcha. What have been some of like the challenges? So, I mean, you would consider private equity, right?
In one facet of it. Private equity is a subset of investment banking, which is a subset of asset management. Investment banking is the thing about it, like the parent of it all. And then you have regulated, non-regulated services as 2 different divisions: investment advisory, wealth management, and then asset management. And then PE, private equity, sits under asset.
That sits under that. Okay. So in your business, which obviously there's a lot of money being moved, that there's a lot of passion, there's obviously one side thinks it's worth one thing, another side thinks it's worth another, and everything. Could you just kind of like walk me through kind of like a deal flow of kind of your typical or deal or something like that?
So it's deals with clients and deals and business in general. I always say it's like people. Everything is different every single time. It's different.
Right.
You could have similarities, but it's going to be different every single time. We break deals down into 5 distinct. I hope this is going to be the answer that's going to be proper. 5 distinct portions. You have origination, structuring, diligence, legal, close. So origination is either finding the investor or finding the company to buy or whatever else it might be, the beginning part of the journey. Then you have structuring, which is real investment banking. That's you're trying to build an airplane and sell it, if you will, and you have to make all the parts, put them all together in a way that actually makes sense and can be sold. And so that's structuring. Diligence, making sure it's all clean from either side of it. Legal, we have to work with lawyers. It's synonymous, lawyers and bankers at the deal stage. And then closing, that's where everybody's parties and has a good time afterwards. But it's hard to get to that moment.
Yeah, very hard. And you said 97% of the deals don't go, right?
That means we don't onboard them into our firm. We have a relatively high success rate in comparative nature to the statistics of the world, but I like to think that there's processes and procedures that I put into play Like we developed proprietary AI systems in our organization a long time ago to try to be forward thinking about it, but also to compress deal timelines and increase probability of success. And so we tend to think that we do a pretty good job, but deals usually take 3 months to 8 months, depending on the vertical that it is. But yeah.
And as you've probably picked up, we're talking about something way outside my wheelhouse.
You're doing a good job.
but when you think about like your particular skill set, you said sales and all these things, but can you kind of like condense it down? Like what kind of skill set, what do you need to be really good at to be really good at what you do?
Tolerance for pain is definitely one of them.
All right.
But no, it's you have to be really good at sales for sure. I mean, there's just no. My parents barely understand what I do. Most people probably the same.
Yeah.
And I just tell people I'm a very fancy salesman that sells very expensive things. Right. But sales is a very big thing in the world of investment banking. Finance, obviously, understanding numbers. You have to understand business to a level that most don't care to, right? And you have to formulate a lot of strategy from other people's 40-hour-a-week jobs. You have to basically understand every single one of theirs and then probably be a little better than they are at it. So any facet of business to understand and be very, very good at. Numbers are good, but you don't have to know trigonometry. You just have to know it. I think that I learned in first grade the PEMDAS, like parentheses, exponents. Basically, parentheses, multiply, divide.
Yeah,
that's pretty much what you need.
All right.
But real world things to relate it to, it's like puzzle, like figuring out a puzzle. Every single deal, every client that's going to actually be able to be put all together, and every single puzzle piece is a different facet of business. So you have to understand so many different things, but just be good at, I guess, the finance side of it is a prerequisite, which is what I really learned here at FSU. And then an insane belief in yourself and your ability to actually accomplish something that's a little bit heavier than other things.
Yeah. So I've been reading a lot about essentially the boomer generation retiring, and that there's a lot of small to medium-sized companies that are coming on the market as they retire and things like that. And that there's been a big movement kind of like in the entrepreneurship world of, instead of like starting something fresh, you buy something. I guess that's in entrepreneurship, the question you're always asking, should I buy it or should I build it? And what's your viewpoint on the future and all these businesses that are going to be coming up for sale? Are you in that world?
Enough. I've heard it a lot, right? Like this boomer exodus and sale of their organization. And I have people that I know that have spun full funds for the acquisition of all of these different enterprises. For me, I think that whichever one, right? I've sat on stages and said buying companies is the easiest way to grow. Without a question, I still maintain that. But I believe that you have to start in order to grow. So I think that entrepreneurship is the prerequisite to anything. And if you want to go out and buy them, then you buy them. But there are folks out there that are called independent sponsors that go out and just buy their initial organization to actually bring it to the next level or get themselves going. And there are ways to buy organizations that you don't need even almost any money, almost any cash, excuse me. There are different ways to do that. But for me, I think that if you're starting out, start out the right way, learn the lessons that you need to learn, because you buy an existing company, you're going to learn your lessons with a company that's operating and fully there. Maybe learn some of those lessons down, as you're coming up and pacing into an acquisition. But existing entrepreneurs, meaning you've been there, you've learned a lot of these lessons. It's a wonderful way to grow. Without a question, I wouldn't have a facet of our business if there wasn't mergers and acquisitions, which is buying and selling of companies. So I need this to continue to happen.
I founded and ran a company called Red Eye Coffee here in town, and I needed your services. I wanted to expand our roasting capacity, and I was asking the question, should I build it or I buy it? And there was a local company that had really good roasting capabilities and decided to buy them. And it turned out to be one of the worst mistakes I ever made. Not because everything on paper looked right, but I didn't have enough seasoning to understand when to walk away from a deal. And like, I look at it now and I look at those red flags and I'm like, I can't believe I just like rationalized those away. But I probably could have used somebody like you to be like, Mark, dude, this is not going to work. Is that?
I've heard this more times than you probably think, right? Sometimes that's the way it goes, and sometimes it works out really, really well. Definitely with certain size organizations, that's when you would spend the money on people like us. But it's the idea that growing through acquisition is easy, right? And it complements exactly like you need a new roaster.
Yeah.
Should I start it from the beginning and do this whole process? I'm not well versed in coffee per se. I don't even drink coffee, truthfully. But
Podcast's over.
Oh, no, it's
go ahead. Sorry.
But what's for sure is that it is easy, but you'll find that, right? Like you'll find that if you're not an expert in that exact service or that exact offering or whatever it is, you either should, in my opinion, have somebody who does know it on your team, something to that nature, because you'll find, to my ear, like if you're pitching me a deal, I get pitched 10 times a day, literally almost, is that I'll hear on my ear certain things that don't sound right, because I've just done it for so long. Even if it sounds spectacular, grade A+ to most people, that expertise within your field will allow for you to understand a little bit better. But I'm not going to sit here and tell you that I haven't had that exact same thing happen and I got hired for it, right? Where I thought one thing, but all the lessons that you learn along the way, you'll probably hear this a lot because I very heavily believe that there's no bad things that actually happen to you. It's just the lessons that are taught from it that you need in order to become who you will become. But maybe that's my way of thinking about it. But yeah.
No, I mean, I think it's a good, healthy way to think about it. Like, I mean, probably in that particular business, I did 2 mistakes that were extremely costly. I had opened up 3 locations and they were all going great. And I thought I was the best business person in the world. And I thought I built a super brand and had an opportunity to open up a flagship store in a new complex in the Northeast here in Tallahassee. And I shake my head now, like my mindset was, of course, people are going to see that logo and they're going to come. And I didn't do enough due diligence. It was a new site, so it wasn't built when I signed the lease. And I didn't do the due diligence or bring in people with the mindset to really help me understand the ingress egress of that shop. And man, I tell people I have a $500,000 education in ingress egress. I would have never dreamed that everything that I built came down to how many turns did they have to make in order to get into my shop and out of my shop. And I'm just like, man. And then the other huge mistake I made was in that acquisition. I just wanted it so bad, and I wanted what they had built, and I didn't weigh the culture cost of it. And both of those things, thankfully, we survived both of them, but it cost me a lot of money and didn't make my wife happy at all. I tell people the 2 happiest days of an entrepreneur's life is kind of like the boat thing, is the day you open your business and the day you sell your business. And that was definitely true with Red Eye. It's kind of funny because like I'm kind of known as the coffee guy at FSU, and any student who wants, to start a coffee company, like everybody goes, oh, go talk to Mark. And I'm like, I'm the last person you want to talk to about starting a coffee shop, I'm going to talk you out of it. Yeah. So if you really want to do it, like, don't talk to me. Yeah. It's too painful, but
I get it.
It's rough. So when you so every business has challenges, and and those challenges are never in the paper, or hopefully they're not in the paper, and things like that. But I think a lot of times we look at successful entrepreneurs and just think it's a breeze, and they don't have the challenges that other people face and stuff like that. What are some of the challenges that you face in your company that really stretch you as a leader and an entrepreneur?
Yeah, that's a hard one too. You said you were throwing hard ones at me. I've had a lot of challenges. I feel like every period of growth creates more challenges, even though from the outside in it looks glamorous and spectacular. Inside, as you're growing any organization, it's painful. It's really, really tough, especially if you're going to try to compete at a very high level. And so my firm, I can only speak from my eyeballs. I mean, I can speak for many, many clients, but from my eyeballs, we experienced a term that we'll all learn in business school called hypergrowth. We had a massive, insane hypergrowth. And so maintaining that, and I've never raised cash, even though I do it for a living, is raising money. I've never done it for myself. I never necessarily needed to. But we grew so intensely and so fast, almost in an unheard of fashion, that maintaining that and understanding what that meant, and understanding every single day the decisions that had to be made in order to continue not only to grow and keep the brand name as solid as I possibly could, but also maintain the internal mechanics that has to be there, like cash, right, to be able to turn and burn the business for years to come. And so every day has its own challenges, right? And you'll never, in my opinion, as an entrepreneur, you will never not have a day without challenges. And if you do, try harder, because you're going to need to create some. But how you deal with the challenges and how you deal with those problems will determine everything for you. And I think that walking a beautiful sunshine type path is fallacy. It's not real in the world of entrepreneurship, but the challenge is how you interpret them to create the lessons that will be the prerequisites for the bigger business that you are going to build. So I actually appreciate all the challenges that I went through. I'm grateful for every time that I woke up and I was like, damn, today's going to suck. Yeah. Right. And it's something I don't look forward to, because I know it's still going to be there. But I welcome it, knowing that I'm going to tackle it head on. I'm not going to balk at it, and I'm going to make the best decision possible. If it's wrong, it's going to be wrong, and I'll learn from it. So
that's a good word. So then obviously the name of this podcast is the Innovation Mindset. And I have a series of books called the CEO Mindset Reset. I believe a lot in mindset, probably because there's times in my entrepreneurial journey that I lost my why, just to kind of go back to that. And I call it the dirt principle. I tell people, imagine you had a huge pile of dirt and you were super motivated to move that dirt 10 feet over. After a while, you would just get burnt out on it. It's just like, well, what am I doing with my life? I'm just moving dirt. And then somebody comes in and reminds you that you're clearing the path because your son, who has a heart condition, needs to get through this road to save their life. And that pile of dirt now has a completely different meaning. It's not just random dirt. It's connected with saving your child. And I think that's the power of mindset. And I think a lot of times us as entrepreneurs or CEOs, everything looks like a pile of dirt unless we're taking care of ourselves and our mindset, making sure that we're feeding into ourselves and mindset. So for you, how do you keep your why centered, and how do you keep your mindset in order to be successful?
Yeah, it's a great topic of discussion, and I love the name of the podcast and everything you just said. It is fixing my mindset, and fixing my mind was a challenge of mine that I had spent years ago. I spent literal years, 8 hours a day, almost every single day, trying to build a mental frame that was so sound, right? Because dealing with the level of stress that any entrepreneur will have in their own journey, you absolutely need to have a strong mind. And it was the most important thing I ever did for myself or for my business or for my family or anything, was train my mind, is the best way to say it. And there are so many lessons that have come from it. I do so many things every single day to try to maintain it. And I think that for myself, I where I find myself right now is in a lot of I don'ts. So in my mindset, so discipline is a very big component of what I understand mindset to be, right? If you make a promise to yourself, do it, right? Because if you're not going to hold your own promises to yourself, who are you going to hold them to?
Yeah.
But I don't drink anymore. I don't drink coffee, even though I used to. I used to drink too much coffee, but I don't drink coffee. I don't watch TV. I don't do Instagram. I don't, right, everywhere. And that is not because I want to be different. It's just because I wanted to focus. I wanted to have I had a goal, right? And I still have a goal, and I'm trying to accomplish my goal. And I want to be great at what I do. I want to be one of the best out there if I can, right? And I'm going to try my very hardest to do that. Mindset was everything to even start the journey to become what I hope to become sooner than not.
Nice.
Yeah.
So you started Equiturn in 2017, right? You said that?
That's right, yeah.
So I like to end the podcast always asking my guest a question. If you could go back to, say, 2016, before you started your business, and you were allowed to tell your younger self one thing that would help you along in your journey, what would you tell yourself?
It's a tough one, but I think that I would tell myself the sun will rise the next day, so never worry, is that things are going to feel throughout the journey like the sun won't rise the next day, that, this is going to be catastrophic, whatever it might be, because there are going to be problems. There are wins all the way through. I don't want to make it seem like entrepreneurship is terrible. I love it. I wake up every day and I enjoy what I do. But knowing that the sun's going to rise the next day, knowing that you have one chance at this earth that we all live on, at least that we all are aware about, and what's really the worst that's going to happen if you really go for it and you really push yourself to a limit that you didn't think was possible, the sun will rise the next day.
Yeah.
You'll find it. 3 years, I'm old now. So looking back, on all the things I thought were going to be life-ending, life-changing, I don't see it anymore. And so understanding that in 3 years, you won't remember the moment. In 5 years, it won't even be the feeling that you had. I think that that would be my biggest tell to myself. Just work through it, push through everything. It's going to be hard, but the sun will rise and you will be happier for what your decisions are today.
Awesome. That's a great word, Josh. I really appreciate you coming in today and participating in 530 and doing the podcast. Just really, really appreciate it.
Of course. Yeah, no, thank you for having me. I really do appreciate you as well.
Cool. Hey, thanks for tuning in to another edition of the Innovation Mindset Podcast, powered by the Jim Moran College of Entrepreneurship. Hey, if you like this episode, be sure to hit that like button and be sure to also to hit that subscribe button so you never miss another amazing episode. We'll see you next time.